At RAQAM Consultancy, we help businesses across the GCC navigate complex regulatory and excise tax requirements with clarity and confidence. As excise tax frameworks evolve across the region, understanding what's changing and how it impacts your products is more important than ever. Excise tax is transforming how businesses operate across the GCC. From sweetened beverages to energy drinks, new rules are being introduced, and preparation is critical. Excise tax is indirect tax applied on specific goods, often referred to sin tax. It was first introduced by GCC countries in 2016 to support authorities' policy objectives in public health and environment sustainability. Any business that manufactures, imports, or releases excise goods into the local market must register with the tax authority, file returns, and pay excise tax. Excise tax applies across the UAE, Saudi Arabia, Oman, Bahrain, and Qatar. Covered goods include energy drinks, carbonated drinks, and sweetened beverages, with country-specific variations. Before 2026, most GCC countries apply flat excise tax rates. Typically, 100% applies to energy drink products, while 50% applies to carbonated and sweetened beverages. In Oman, excise compliance includes the digital tax stamp system, which tracks excise goods from factory to consumer and helps combat illicit trade. Starting January 1, 2026, Oman has officially extended local enforcement, and Phase 3 of the Digital Tax Stamp (DTS) has come into effect. All manufacturers and importers must ensure that any product subject to excise tax, excluding soft drinks and sweetened beverages, carries a valid digital tax stamp before being placed on the market. From January 1, 2026, the UAE replaced the flat 50% excise tax on sweetened drinks with a tiered, sugar-based excise tax model. Under this approach, the higher the sugar content, the higher the excise tax. Excise tax on sweetened beverages will be calculated based on sugar content per 100 milliliters. High sugar drinks containing 8 grams or more of sugar per 100 milliliters will be taxed at AEE 1.09 per liter. Moderate sugar drinks containing 5 to less than 8 grams will be taxed at AED 0.79 per liter. Low sugar and artificially sweetened drinks will be zero excise tax.
To comply, businesses must submit mandatory sugar analysis lab reports issued by laboratories accredited by the Ministry of Industry and Advanced Technology. An ECAS conformity certificate is required for excise classification. If valid lab reports or ECAS certification are not provided, the product will automatically be taxed under the highest excise tier by default. Excise tax rate for energy drinks didn't change and is still at 100%. Also, the excluding products from sweetened drinks as dairy beverages remains unchanged under the new UAE model. Businesses may deduct excise tax already paid on unsold stock if the applicable tax rate decreases under the new tiered system. Saudi Arabia also introduced the new sugar-based excise tax model in 2026. Tax rates will vary based on sugar levels, with higher sugar content attracting higher tax. Qatar and Bahrain continue applying excise tax on selected products. Kuwait is preparing to introduce selective tax legislation in the near future. These regulatory changes impact product pricing, labeling, ERP systems, documentation, and even product formulation. Non-compliance can result in product impacts, affects market share, and other related issues. RAQAM Consultancy supports businesses across the GCC with sugar audits, product reformulation, product classification, lab coordination, ECAS certification, ERP updates, labeling compliance, and tax authority registrations. We ensure your business is compliant, tax optimized, and audit ready. RAQAM also supports you in delivering comprehensive solutions across product compliance, quality assurance, regulatory intelligence, regulatory advocacy, and regulatory consulting to ensure seamless market access and sustained regulatory excellence. RAQAM supports businesses across 19 countries in the GCC, Levant, North Africa, and Turkey. The time to prepare is now. Contact RAQAM Consultancy to confidently navigate excise tax changes across the GCC in 2026.